Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on XLK, Apple, and Facebook. So the tech sector is still holding up. We closed very strong up at the highs. The market pulled back today thanks to the financial sector. The tech sector has yet to see consolidation since our round of earnings have come about. We do have a little support here at 62.51, but you can see since the gap up open, it's been extremely strong and a lack of profit taking. So I'm cautious at these levels. The risk to reward up here without seeing consolidation is favoring risk, but there is no sign of any weakness. We had a break in the low only by a penny of yesterday, 63.41, 63.40. So that's a little double bottom to be watching. If that level were to break, I would personally be out of a bullish position. The weekly time frame, extremely strong still. We are on our 7th green week in a row. Again, noting the closes at the highs for continuation of momentum, and that is not changing from what we currently have, although we still have 3 trading days left to go, and there's very limited range because we're only 2 trading days into the week. Apple on the daily time frame, new all-time high. So the fact that we keep following through shows those bulls looking good for follow through. Unless we see a break of the higher low pattern in the last few days, we have 175.25 as resistance, and we have support at 173.60. If we break the higher low, that will be the first red flag, and we will be looking for some consolidation. Again, I do believe Apple is going to mark the exponential, or I should say the tech sector, seeing profit taking. So if we see profit taking in Apple, we will likely see it across the sector. I do believe that Apple is leading the sector, which is leading the market. The market pulled back today because the financial sector dumped, but if we see Apple pull back, I do believe we will see further consolidation. My theory stands on that, premise. It's all about Apple's strength to keep the bulls in control in Amazon, in Google, and watching to see as long as that holds up, the bulls are just fine. But I don't like the risk to reward for any bull plays up here, personally. Apple on the weekly time frame, still just fine. So there is no red flag. Again, it's the same thing we've been saying for the market for all 2017. There's no red flags. We just want to be cautious and protect trades. If you are long-term, none of this applies to you. I'm talking about the next week or two as we look for short-term healthy consolidation, potentially even to fill this gap down to 168.50. Facebook on the daily time frame, seeing some follow-through on this bounce, likely to see an equilibrium pattern with our high, low, a bounce to set a lower high, and then we'll look to form a higher low compared to 176.71. Resistance is 180.75 and 181.94, and we'll see if the bulls can keep the higher low pattern up on the daily. That's basically what I'm watching on every tech name. Do they hold higher low patterns on the daily? And if not, that is the first red flag and signal for potential profit taking. Facebook on the weekly, negating the bearish reversal doji from last week, but still very strong overall because we are negating that reversal candlestick and keeping the daily higher lows intact. So bottom line, bulls in control, no sign of any slowdown. If entering bullish positions up at these levels certainly warrants caution, as the risk to reward favors risk after running during earnings, running through earnings. Now earnings are ending, and again, just cautious of potential profit taking. I hope you have a good night. We'll see you tomorrow, and keep an eye on Apple, most important name in the stock market these days, in my opinion.